Hey everyone, in this video, we're going over Tesla's Q2 2023 earnings report, which just dropped today, July 19th, after hours, and their earnings call is coming up at 5 p.m. Eastern. Now, before we get into this report, smash the like button and subscribe to the channel if you haven't subscribed yet. Now let's get into it. First up, if you're looking to see what the stock is doing after hours as this report has already come out, it's basically flat, just to be clear. This stock has not shot up, the stock has not crashed down, the stock currently remains flat, and it has a market cap of $912 billion with a pretty high PE, but it's obviously got a ton of growth ahead. So let's get into Tesla's report. They start their report with this nice summary page with highlights, and I think this is one of the best ways for any company to put out an earnings report, give you the most important information right off the bat that they feel. So the first thing is profitability. The company reported 9.6% operating margins, $2.4 billion of GAAP operating income in the quarter, $2.7 billion GAAP net income, and $3.1 billion of non-GAAP net income. When it comes to cash, their operating cash flow was $3.1 billion with free cash flow of $1 billion. That a $0.7 billion increase in their cash and investments quarter over quarter, bringing their cash balance to now $23.1 billion. Their operations, they've shown that Cybertruck factory tooling is on track. They're producing RC builds. RC is basically release candidate builds. Model Y became the best-selling vehicle globally in Q1. When it comes to the summary, this is what Tesla has to say. Q2 2023 was a record quarter on many levels, with our best ever production and deliveries and revenue approaching $25 billion in a single quarter. We're excited that we're able to achieve such results given the macroeconomic environment we're currently in. Our operating margin remained healthy at approximately 10%, even with price reductions in Q1 and early Q2. This reflects our ongoing cost reduction efforts, the continued production ramp success in Berlin and Texas, and the strong performance of our energy and services and other business. Our commitment to being at the forefront of AI development entered a new chapter with the start of production of Dojo training computer. We are hopeful that our immense neural net training needs will be satisfied using our in-house designed Dojo hardware. The better the neural net training capacity, the greater the opportunity for our autopilot team to iterate on new solutions. In conclusion, we're focusing on cost reduction, new product development that will enable future growth, investment in research and development, better vehicle financing options, continuous product improvement, and generation of free cash flow. The challenges of these uncertain times are not over, but we believe we have the right ingredients for the long-term success of the business through a variety of high-potential projects. In my opinion, this was a great summary. They have showed that they continue to have healthy margins even though they've reduced prices. They have shown that their AI development is really working for self-driving, with the Dojo computer being actually in production now. And the most important thing about that whole Dojo training computer, other than training their system, saving them money, as far as not having to continuously buy like NVIDIA GPUs and things like that, is that they take vertical integration more serious than anyone. They are building everything in-house. They want to do everything best. They want to basically control their own destiny. And that in-house vertical integration, it's just a loop that makes their products better and keeps them ahead of competition always. And it helps reduce their costs, which make their margins better. So Tesla really just has a leg up on everyone when it comes to vertical integration. And the last note on that, it also is all purposely built. So when they want to make a chip to train self-driving, they're making a chip specifically to train self-driving. They're not just buying a general purpose chip and then using it for that. And that goes across all vertical integration they do. They build things purpose-built for exactly what they need. So now let's get into some of these numbers. Their total automotive revenue for this quarter was $21.268 billion. Year over year, that's a 46% increase. This company is huge already, and obviously they are continuing to grow massively. 46% increase on revenue from automotive. When we look at them a year ago, they were doing 14.6 billion in automotive revenue. That went up to 18.6, 21.3. We did have a drop in Q4 to Q1, but that's totally normal. Q1 is always the lightest quarter of the year. Q4 is always the largest quarter of the year. It went to 19.9 billion, and now we just went up to 21.268 billion, which is basically in line with Q4 of 2022, but it's only Q2. This is a slower part of the year, so I'm excited to see how Q3 and Q4 progress. When it comes to energy generation and storage revenue, they did $1.509 billion in energy generation and storage revenue. That is a 74% increase year over year in revenue from Q2 2022 doing $866 million up to $1.5 billion. Now, Q1 last quarter, they did do $1.529 billion, so it's in line with Q1, but we have seen a steady, slow increase. It's not always productive to just look quarter over quarter, because in 3 months' time, you could have a big project here or this or that, but the bigger picture is looking year over year over year, over multiple years, and how everything is really changing, not quarter over quarter. And year over year, they had a 74% increase. It's massively growing business for them. Another huge business that's growing for them is their services and other revenue. This is charging, this is service repairs, things like that. We had it at $2.15 billion of revenue in the quarter. That's a 47% increase year over year. That's growing similar to the automotive business, which kind of makes sense. So you're growing more cars on the road, more service on the road, more charging for those cars, etc. Massively growing business. It was 1.46 billion a year ago. Now it's 2.15 billion. So, and this one quarter over quarter has had steady growth and increases. So a year ago, 1.46 billion. Q3 was one of 2022 was 1.6 billion. So 200 million more. Then it was 1.7 billion, then 1.8 billion. Now it's an even bigger step up to 2.15 billion. So extremely nice. And we're going to actually see more service revenue come on as they've opened up their charging stations to other automobiles as well. Now, when you take all three of those segments, you put them together, their total revenue was 24.927 billion, so basically 25 billion. This is up 47% year over year as a whole from 16.9 billion in the same quarter 1 year ago. So obviously they are growing revenue at close to 50% year over year growth rate, which is what they've guided for. Now, some people will point to margins coming down, which they have. Total GAAP gross margin was 18.2%, and that's coming down from around 25% or so a year ago. So they are having less margins, getting less of the, even though they did 25 billion instead of 16.9 billion, they only made 4.5 billion and they made 4.2 billion a year ago in gross profit. So they are really, he's such a big advocate of self-driving and AI, and he really wants to scale, Elon Musk, that I believe they are sacrificing margin today in order to really scale and get as many cars on the road, collect as much data as possible, and still do it profitably. He's not going to do it at a loss, whereas a lot of these other car companies are doing it at a loss. Now, more important than just the gross margin is the operating margin, because they have efficiencies they are running across the whole company. And their operating expenses were 2.1 billion, so they did increase 21% year over year. And as they scale and grow, obviously we expect their operating expenses to go up, but their operating margin was 9.6%. Now, this is obviously down from the 14.6% it was a year ago. We saw it go from 14 to 17 to 16 to 11 and now 9.6%. So they are really just trying to basically put pressure on everyone else, take less margins, but make it the easiest choice it can be for the buyer to choose a Tesla over any other car. Now imagine being another car maker, being Ford, being GM. You're already losing money on your electric vehicles, and Tesla's lowering their price, still making profits, good profits, 10% to the bottom line after operating expenses, and making it that much harder. Do you lower your price further and take even bigger losses on your car, or do you keep your price at a loss that it already is and now just have a worse comparison, your vehicle being sold for its price versus Tesla now at a lower price? The comparison now has just become worse for you, and you're really in a tough spot if you're those companies. So Tesla really is playing the scale game. That's what I see here. I believe that ultimately margins will eventually come back up, especially as more and more software revenue comes into play. Now we have their EPS on the bottom at 78 cents GAAP, 91 cents non-GAAP. This is a 20% increase year over year. We do know that expectations were around 82 cents on the non-GAAP, and they had 91 cents on the EPS, so they did beat expectations coming into this, but not by a massive amount or anything, but it is a beat. Now, they do cite the positive and negatives across the board on things, like for revenue, they said how growth in vehicle deliveries, growth in other parts of the business has helped the revenue, but the reduced average selling price year over year and the negative FX impact of $600 million was a decrease towards the revenue. That said, they did grow revenue by 47% year over year. When it comes to profitability, the reduced average selling price due to the mix in pricing, the cost of production ramp of 4680 cells, and other related charges, the increase in operating expenses driven by Cybertruck, AI, and other large products, and the negative FX impacts have affected profitability. Yet on the positive side, they had growth in vehicle deliveries despite the margin headwinds. They had a lower cost per vehicle to make the vehicles. They have saved on figuring out how to make them cheaper and still get the same product or better, hopefully, which includes lower raw material costs, they say, and how the IRA credit they're getting. And then they have a gross profit growth in their energy business as well as their services. So that's all helped the profitability. Now, when it comes to the production and delivery numbers, we know that Model S and X had 19,489 production and then 19,225 deliveries for the quarter. That's up 19% year over year. We know that Model 3 and Y had 460,211 for production, and they delivered 446,915 of those vehicles for the quarter. That's an 87 to 90% increase year over year in production / delivery of Model 3 and Y. So obviously growing massively. Personally, what I enjoy looking at on this slide, every earnings report, since we already know the production and delivery numbers for vehicles in advance, is really the energy and service type of business that they offer that we can get a better insight in. So for example, we see that their solar deployed was 66 megawatts. This is down 38% year over year, or basically in line quarter over quarter. Their storage deployed, though, which is a lot bigger business for them than actually solar, the storage was up 222% year over year to 3,653 megawatt hours, up from 1,133. So energy storage is an extremely high growing business for them. When it comes to Tesla locations, they're at 1,068 locations, up 29% year over year. So they're steadily growing their footprint of locations. Their mobile service fleet at 1,769 mobile service vans. That's 22% year over year growth in their service fleet, which is really nice, steadily growing every single quarter. And what I love to see is this global domination of superchargers. Their supercharger stations up 33% year over year, hitting 5,265 stations. And what that translates to is 48,082 connectors of Tesla superchargers on a global scale. This is up 33% across the board on the stations and the connectors. Just a year ago, there was 3,971 stations, now 5,265 stations. So every quarter they grow their stations and their footprint for charging, which they are obviously the undisputed leader in. Now, when it comes to vehicle capacity, in Q2, they produced a record number of vehicles thanks to the ramps of their new factories, as well as strong performance from their Shanghai and Fremont factories. They also say they remain committed to smoothing deliveries throughout the quarter by reducing the percentage of vehicles delivered in the third month. So vehicles in transit, test-driven, and display vehicles account for a substantive majority of total days of supply right now. When it comes to installed capacity, we know in California, they're sitting with 100,000 production capacity for Model S and X, 550,000 capacity for the Model 3 and Y, bringing that to 650,000 cars that can be produced, vehicles that can be produced in their California factory. For Shanghai, they're saying more than 750,000 capacity when it comes to 3 and Y. For Berlin, they're saying Model Y capacity is at 375,000. For Texas, they're saying greater than 250,000. And they're saying this Texas Cybertruck tooling is beginning. They're not letting us know yet capacity for that. There's a pilot production in Nevada for the Tesla Semi. They're talking about various different locations for future factories for their next-gen platform, as well as the Roadster, which is going to be disclosed as well, where it's being produced and capacity, etc. It's all in development. So total current capacity, besides the pilot production for the Semi, besides knowing what Cybertruck tooling and capacity will look like in Texas, sits at 2,025,000 production capacity for just Model 3, Y, S, and X. And we're going to obviously, so it's already surpassed 2 million in capacity, and we're going to see that continue to grow as Cybertruck comes online, Semi comes online more, and their future next-gen platforms and Roadster come online. Talking about their factories, their California, Nevada, and Texas U.S. factories, they say at Gigafactory Texas, in addition to the continued success of the Model Y ramp, they're also working on equipment installation for the Cybertruck, and it remains on track for initial deliveries this year. So we are going to get Cybertruck this year. They're saying we've made notable progress on yield improvement of their 4680 cell production lines, because going back to that vertical integration, they do produce their own battery cells, the 4680 cell, with a lot of innovation in it, tabless design, etc. And they continue to build capacity for cathode production and lithium refining in the U.S. When it comes to China and Shanghai, they say since our Shanghai factory has been successfully running near full capacity for several months, they don't expect a meaningful increase in weekly production run rates. Gigafactory Shanghai remains their main export hub. So they are using that factory to export internationally to Europe, most likely, and things like that, while Europe is still ramping their factory. But they're not expecting to have increased production going forward in any meaningful way, because it's full capacity as of right now, unless they do some expansion later. When it comes to Europe, their Berlin factory, they say that their factory in Germany produced a standard range Model Y in Q2 for the first time. They're building off momentum from its success in Q1, and Model Y was the best-selling vehicle of any kind in Europe year to date. Now, the last thing to note on this slide before moving forward is on the bottom right, you can see how the market share of Tesla vehicles by region has just been steadily growing from 2017 through Q2 of 2023, quarter over quarter. We see a nice increase growing. So they are taking more and more market share. Now, when it comes to core technology, they first list off artificial intelligence, software, and hardware. They say there are 4 main technology pillars are needed to solve vehicle autonomy at scale: extremely large real-world data sets, neural net training, vehicle hardware, and vehicle software. They're developing each of these pillars in-house. This month, they're taking a step towards faster and cheaper neural net training with the start of the production of the Dojo training computer, which we spoke about earlier. When it comes to vehicle and other software, they say for customers getting a Model 3 or Y for the first time, we launched the Get to Know Your Tesla experience, where users can adjust their seats, mirrors, steering wheel, set up phone key, and learn about topics such as regenerative braking, and to help customers discover ongoing improvements in software updates. They now highlight new features directly in the user interface, and they encourage users to try features they have missed and added the ability to search controls. For battery, powertrain, and manufacturing, they say they're now testing Cybertruck vehicles around the world for final certification and validation, and it might be the most unique vehicle product in decades. And with that comes trialing and testing new technologies. As far as we know, the Cybertruck will be the first sub-19-foot truck fitting into a garage that has both 4 doors and a 6+ foot bed. Both technologically and architecturally, this vehicle is going to break a lot of boundaries, very much in line with how they think about vehicle engineering and manufacturing. Now, cumulative miles driven with FSD Beta, this is something that I personally drive on my Tesla. I have FSD Beta on both my Model S and my Model Y, has been going up like crazy as they've basically expanded the FSD Beta across their fleet to people who've purchased FSD. So they're showing how they've passed 300 million miles driven. And with this exponential curve, I'm sure we're going to see them pass 1 billion miles on FSD Beta alone very soon. And obviously that's important because the more miles and the more data they collect, the more instances of weird corner cases that they can use to solve in their Dojo training neural nets, and just be able to get the self-driving as good as possible. And it's already pretty incredible. I mean, I have many drives where I don't disengage at all. So I do think FSD is awesome. Now, the internal projection of Dojo compute power they've shown is start of production is right now, July 2023. And by January of 2024, they think it's going to be a top 5 in the entire world when it comes to compute power. And they believe they'll get to 100 exaflops by October of 2024. So, they basically believe they're going to be able to scale this to be the most, probably most powerful computer in the world as they build it and build that computer out with more and more dojo chips. Now, we did speak a little about how energy storage deployments have been growing. They show that in the chart on the top right, how services and others gross margin has improved, from 2016 through around 2021. It was always a losing money business. It had negative gross margins, but that really flipped in 2022 to being a positive gross margin business as they've been scaling their services and other business. And it's steadily increasing. We're seeing it coming close. It's showing on the chart just under 10%. And we're going to see, I think, that continue to grow to be a pretty high profitable business. I think in past remarks, Elon said that he looks for the business to be around a 20% gross margin business. So we're not even close to, we're less than halfway to the gross margins that they believe they'll achieve with services and other. They talk about how solar has remained kind of flat, and they blame it really to high interest rate environment. And of course, they're going to mention how in the second quarter, this quarter, 2023, has been the quarter of supercharging. A significant number of companies, including Ford, GM, Mercedes, Nissan, Polestar, Rivian, Volvo, and Electrify America, all announced the adoption of NACS, the North American Charging Standard, which is a charging standard that Tesla developed over a decade ago. It's been in all Teslas since, and for their North American products. So further opening their charging network in 2024 will enable both faster market conversion for people with combustion vehicles, ICE vehicles, to switch over to EVs, as well as faster growth for their charging network through a larger addressable fleet. Now, when it comes to outlook, one of the most important things is the future of a business. The volume portion of their outlook, they continue to say that they're planning to grow production as quickly as possible in alignment with their 50% CAGR target that they've been guiding to since early 2021. They say how in some years they'll grow faster and in some they'll grow slower, depending on a number of factors. For 2023, they expect to remain ahead of that long-term 50% CAGR with around 1.8 million vehicles for the year. So in my opinion, they're going to break 2 million vehicles this year, and we'll see how it turns out. But to continue 50% year over year, they'd have to hit 1.8 million. And I think they're definitely going to beat the 1.8 million for full year 2023. When it comes to cash, we have ample liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses furthermore. They'll manage the business such that they remain a strong balance sheet during the uncertain periods. When it comes to profits, they expect to execute innovations and reduce the cost of manufacturing and operations over time, and they expect their hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. And then they talk that Cybertruck remains on track to build initial production later this year. Now they're showing photos off of Cybertruck and in the factory production of it. We see the testing of the photos on the top of Cybertruck in water. We see it in the dirt. They say it's built to do real work. Then we see the production on the bottom, those two photos. They show how they're building the RC units. And then lastly, we see this big photo here of the entire team, the first RC unit of Cybertruck from the factory, and the whole team just taking a photo together. I think that's awesome. And they do this with every vehicle when they release the first one or off the line, or when they hit their first 1,000 produced, 10,000, 100,000, whatever it was. They always do these photos, and I think that's pretty awesome. Now, Tesla also always gives us these charts to really put things into some perspective. So first, it's just key metrics quarterly, quarter over quarter. And we see how vehicle deliveries, a nice steady increase. Even though we have sometimes those drops quarter over quarter, it's a nice steady increase of vehicle deliveries constantly going up. When it comes to operating cash flow and free cash flow, it's a little more mixy because they're sacrificing some of that cash flow for better scale right now. But we did see it going up. We see a little dip now. Now this is quarter over quarter rather than year over year. And we will see, I think, as a year over year picture in the grand scheme, extremely well free cash flow generation and growth. When it comes to net income, we're seeing a nice steady increase. Obviously the last 2 quarters, a little more dip a quarter, 2 quarters ago, and then a little increase this quarter for net income, adjusted EBITDA. But we are seeing the overall picture looking pretty good. Now, when we look at it year over year, we start to see some more interesting things. These are the exact same metrics now, but trailing 12-month versions, so the last 12 months from each quarter. And it looks like a much steadier increase, you can see, because as you start to look back, you actually see the total real picture being really nice growth. Vehicle deliveries really growing well. Operating cash flow, although it's slightly dipped in the trailing 12 months, you can see it doesn't look as messy. It looks like a nice, slow, steady increase up. And same thing with net income, adjusted EBITDA. And as they continue to scale and push their software and things like that, I believe we're going to continue to see these all come up significantly. They're still in the extremely early days of EV, of autonomy, of a lot of these different things that they're working on, energy deployment, etc. Then we can see here on the year-over-year revenue growth, the auto industry's revenue growth is minimal, under 10% usually. Sometimes it dips negative, comes up. Very, very rarely has it been over 10%. We've seen a couple quarters of that since 2019. But basically now it's sitting at like just under 10% or so. We're seeing the S&P 500's revenue growth year over year, kind of, better for sure than the auto industry most of the time, but not like much different, around 10 to 14% or so revenue growth year over year it's recently had. And Tesla obviously doing far better than both. Even when everything went down to negative growth and loss of revenue, Tesla still was growing revenue, just obviously not as much as they were not too long ago. We've seen them as high as 80% plus growth, and right now they're sitting at like 40% growth. And they continue to project 50% year-over-year growth averaged out through 2030. When it comes to operating margin, Tesla has been in line with the S&P 500, yet they're still like very, very low scale compared to their ambitions of 20 million a year. And obviously far outpacing the auto industry. The auto industry sitting with around 7 to 8% operating margins, and Tesla, similar like the S&P, almost double that, around 12% or so, 13% operating margins, where I do think they will continue to have those operating margins increase further, whereas I'm not too sure about legacy auto being able to get their operating margins that much better for many reasons that I've discussed in the past. Their dealership model, so they don't sell direct, the vertical integration situation, a lot of different things. Now, if you enjoyed this video and you've made it to the end, please smash the like button if you haven't already smashed it. If you're not subscribed to the channel, definitely subscribe. I really appreciate you all watching this video and sitting through this 27 minutes or so. Tesla's obviously a great company. I'm curious what you think of Tesla. Let me know down in the comments if you own Tesla, what you think of it, what you think of the EV industry, and if there's a video you want me to do on any stock, just comment the stock below and I'll take a look. Have a good one, guys.